I'm Andrew Goddard, and this is the weekly Volatility Roundup from CMC Connect. CMC's proprietary basket of green energy stocks found some support last week off the back of two favourable economic statements. The sector had been rattled by rising interest rates, leaving many in the industry struggling to meet financing costs. However, the dovish tones accompanying the FOMC release on Wednesday, followed by that weaker than expected non-farm payroll print on Friday, have helped treasury yields soften, in turn offering some support to the sector. 1 week vol on the basket printed 55.15% against 47.12% for 3 months. The US small cap Russell 2000 index also returned to its mid-October highs last week, again driven by those more dovish tones from the Fed. The underlying has added around 7% since last Monday, and with those treasury yields falling, bargain hunters are evidently emerging. That's driving risk appetite, and 1 week vol printed 19.81% against 17.55% for 3 months. Oil prices continue their downward trend despite ongoing geopolitical risks and a smaller than expected build in inventories having been reported last week. Concerns over the health of the global economy, capped by those softer than forecast payroll numbers on Friday, served to drag on sentiment, leaving West Texas Intermediate trading down at levels not seen since August. 1 week vol stood at 36.21% against 30.01% for 3 months. The dollar-yen trade remained in focus, with price action at the start of the week having been driven by anticipation of changes to the Bank of Japan's yield curve control policy, which ultimately fell short of expectations. US dollar/Japanese yen posted fresh year-to-date highs as a result, but support proved unsustainable, and ultimately the non-farm payroll miss was sufficient to reverse the latest cycle of gains. 1 week vol on the pair came in at 7.8% against 6.57% for 3 months.